As earlier today, Procter Gamble, it's the world's largest consumer company, reported that first quarter profits fell 6.8% to $1.02 a share, but that was still higher than analyst expectations, so the stock did rise slightly. Now, the company also reaffirmed its expectations for slightly higher earnings in the second quarter. Joining us now with more on the company's outlook is the company's CFO. He's Jon Moeller. Jon, great to have you here on Bloomberg. Good afternoon.
Thanks. It's great to be here. You know, that earnings per share decline was driven by the divestiture of our pharmaceuticals business. On a like-for-like basis, we actually grew core earnings per share 5% on the quarter, which was a good start to our fiscal year.
Well, and then let's talk about that fiscal year because, I mean, a bulk of your market is still the U.S. market, by far the largest. I mean, talk to me a little bit about what you're seeing in the U.S. trends specifically.
Well, 40% of our business is in the U.S., so it is important. It's a bit choppy in terms of consumer sentiment, but there are some real points of light. One is that consumers continue to be interested in innovation and are willing to pay for it. We've launched a number of premium price innovations into the market in the last 2 quarters, and sales on those premium priced items are actually far ahead of what we had expected going in. And the other point of light, if you will, is what's happening to private label shares, which have essentially flattened versus year-ago levels. So it's not great, but it's not that bad either. Markets are growing at about 1%. That compares to historical levels of 2 to 3%.
What about the other markets that you guys play? We know the U.S. is the dominant one, but the emerging markets, I've talked with your CEO, that's what kind of gets everybody excited. What kind of activity are you seeing overseas?
We're seeing strong growth overseas. We've gone into the year forecasting 6 to 8% growth in our markets, in developing markets. The first quarter we saw 8% growth. From a market standpoint, our growth rates, volume, for instance, in developing markets was up 12% on the quarter. So continuing to be a strong force of growth.
I want to talk a little bit about Walmart. They're obviously a huge customer for you. Your CEO, Bob McDonald, saying today that you guys are working closely with Walmart to boost sales. Are you disappointed with what you're seeing from that relationship at this point, or maybe you could explain the line a little bit more?
No, we continue to view Walmart as a very strong partner of ours, and we're excited about the opportunities that lie ahead of us. I think we're both approaching this with a sense of extreme opportunity.
Is it tougher to catch the attention of consumers at this point? Obviously, those out of work, it's very tough, but is it tough to catch the attention of consumers at this point?
Not really, and I think the underlying trends of our business support that. I mean, from a volume standpoint, we just have incredible momentum right now. We've had 3 consecutive quarters of 7% or above organic volume growth. We haven't had that in 5 years. And that volume growth is very broad-based. All of our regions, 16 of our 17 top countries, 20 of our $23 billion brands. The same thing on market share. So no, we view the interaction with consumers as being a very healthy one at present. What
about the interaction with rising material costs at this point? We spent a lot of time here at Bloomberg looking at the various commodity costs and how much they've gone up over the last year or so. What jumps in costs have you seen specifically, and how do you guys manage them?
Well, most of the increases in commodity costs have been, the most extreme ones have been in the agricultural sector. We really don't have a lot of exposure to the ag complex, so we do have a little bit. And if you look at current spot prices of commodities that we do have exposure to, they were up about 40% in the first quarter. But if you annualize those going to the back half of the year, it only represents an increase of 2%. So they're really getting back to levels that they were at the end of last year. So we don't see that as a significant issue. Further, we've got a very disciplined cost savings program in place. In cost of goods sold alone, we generated 150 basis points of savings this last quarter. Once those commodities get annualized, we'll be bringing that to the bottom line.
Jon, just got about 40 seconds left here. You guys gave a forecast for the quarter and the year. You reiterated your full-year forecast today. Do you feel like in putting out those forecasts that you're kind of erring on the side of being more cautious at this point because there are still a lot of questions, a lot of uncertainty out there about the next couple of quarters?
Well, we try to provide a range of guidance, both on the top and bottom line, that reflects what we think reflects the volatility that exists in the marketplace. So our ranges view them as 50-50.
50-50, okay. Do you think that there's a fair amount of volatility? You say 50-50, but I mean, it could go either way in the next quarter or so?
The big question is what continues to happen to market growth rates across the world. And obviously, to the extent that things like unemployment would improve at all, that's an upside. We'll just have to see. But we're very confident generally in the future here.
All right, going to leave it on that note. Hey, Jon, thank you so much. Jon Moeller, CFO of Procter Gamble. Jon, thank you.